after 2 crashes and 346 deaths. For many companies, it would spell ruin. But for Boeing, the financial fallout actually has been relatively mild. Shares are down some 10% since the Ethiopian crash in early March. They're still up 18% year to date. At least 7 airlines are reportedly reconsidering or reviewing, quote, their orders for more Boeing planes. Later on in the programme, you'll hear from the chairman of Emirates. He says he might switch to Airbus. So far, Indonesia's Garuda is the only airline to actually cancel. And there was a brewing shareholder revolt going on in today's meeting in Chicago, but a vote to strip Dallas Muhlenberg of some power by splitting up the CEO and chairman's role failed by a wide margin, as I mentioned earlier. Christopher DeNicolo is a Boeing credit analyst at S&P Global, and he says the worst is yet to come. Great to have you with us. What do you mean in terms of the worst is yet to come? You mean just quantifying the financial impact of grounded flights, whatever the fix is, and, of course, compensation payments potentially too?
Yeah, no, thank you, Julia. Since the grounding occurred, sort of at the end of the first quarter, and the company just reported its first quarter results, we saw the initial impacts, but it was only for a few weeks, for Boeing. So now as they've, grounded the aircraft, they're not delivering any. They've cut production, but they're going to be building a significant amount of inventory over the next, weeks or months until the company gets clearance from the FAA and from other countries to resume, delivering the aircraft and for them to begin flying again. So it looks like, the impact will increase over time. Like you said earlier, it's a little uncertain of when the aircraft will be approved to fly again. I guess we're looking at sort of the end of the summer as our kind of base case at this point. But so far, the impact has been minimal on the company.
Christopher, what did you make of the press conference today? Because, as you say, you believe the company will not be able to resume those MAX deliveries until later this summer, but there's lots of assumptions in there that they do actually manage to fix this problem, that it is simply a software problem. Are you still assuming that this is a software fix? And based on what the CEO said today, they are on top of this. It's just a case of shoring up confidence for consumers and for the airlines here that this plane is in fact safe with those fixes and the training in place.
Right. I mean, I think the preliminary results from the investigation of the Ethiopian crash didn't indicate any sort of new problems. So it does look like the software will fix it. But like you said, the key now is once they get the software fixed, they have to get it approved by both the FAA, in the U.S. and then the other regulatory agencies around the world, which may want to take their own look, which could drag out the whole process. And then while they're doing that and afterwards, they need to reassure both the airlines and the flying public that the aircraft is safe.
How credible is it for airlines to say, look, we're going to cancel our orders here, we're going to shift to Airbus? Because when I look at the backlog of the equivalent that Airbus produces, the Neo, it doesn't seem credible that airlines could shift without having to extend the time horizon that they have to wait to get delivery of these planes. Is the truth here actually that there's not really an alternative source here, if you want it, at least in the short to medium term, than Boeing?
Yeah, no, if you currently have MAX orders, like you said, you can't switch over to Airbus because Airbus is producing the Neo as fast as they can because they, like I said, have a 6-7 year backlog of aircraft. So in the short term, although Airbus would be able to increase production somewhat, they wouldn't be able to certainly replace any significant order cancellations of the MAX. But over time, we could see a shift of orders from Airbus to from Boeing to Airbus, if there is confidence lost in the aircraft. But like you said, in the near term, there's really the reality of it is there's just not other aircraft for them to buy.
Are you surprised by how resilient the share price has been here? I mean, I know that this company is a prolific provider, traditionally, of stock buybacks, of a juicy dividend. But when the future of this company is so reliant on particularly the order book for this plane and the 737 MAX, which has been such a workhorse for them, tied to the fact that I look at our survey and 91% of the people that are responding are saying they've simply lost confidence in the Boeing 737 MAX. I feel like there's a disconnect there somewhere.
Well, yeah, I can't comment on the stock price, directly as a credit analyst, but, certainly the credit of the company, we have a single A rating on them. We still think they have sufficient liquidity to get through this crisis. Certainly in the near term, they have $7.7 billion of cash, a $5 billion revolver. The long-term reputational impact is a little harder to factor in. And like I said, does this result in lower orders or cancellations in the future? But in the near term, the company is very strong. I mean, like you said, they've generated significant cash flow over the last few years. They've been returning it to shareholders, through dividends and share repurchases. They shut off share repurchases after the Ethiopian crash, and we were expecting them originally to do something around $10–11 billion for the year. So they did $2.5 in the first quarter before the second crash, and then they shut it off. So if you kind of want to size it that way, we assume that they have that other $8.5 billion as a bit of cushion to get them through this problem.